I am drinking a sparkling spiced apple water. It's kind of weird because I feel like there should be alcohol in it and there's not alcohol in it. And I don't know. It's an exciting flavor, but sober. Insurance. Insurance is not good right now, right? Like we're renewing all of our insurance policies and across the board, insurance has gone through the roof. Some of our policies in just the past 24 months have doubled, tripled, even quadrupled in the amount of premiums that we have to pay for certain properties. When you own rental real estate, you got to realize that insurance is one of those things that directly impacts that net operating income. And if properties, like businesses, are valued based on the income approach, meaning you take income minus expenses equals the net operating income, then having your expenses rise adversely affects your NOI, which adversely affects the value of your business or the value of your property. And so not only have interest rates adversely impacted property values and what properties are selling for, in a very close second place, insurance has impacted values of properties because it's just eating into the NOI so substantially. So this video is all about some hacks on ways that you can reduce your insurance costs in order to then maintain a higher NOI for your investment properties. All right, so quick story is I live on a beach in Charleston, South Carolina, and because I'm on the ocean, I have these pretty substantial insurance premiums on my own primary residence. I've not only seen it on my own primary residence, I've seen it on some apartment complexes, on all the apartment complexes I have, not just because they're in, the Southeast or they're along the Gulf Coast, but also because of certain risks seen in the insurance company's eyes because it's an older property or whatever that looks like. So I wanted to share a couple of hacks and things that we're looking at on our insurance policies and kind of the reasoning behind it in order to maybe help save you some money on your insurance premiums as well. So on my own primary residence, I was looking at my insurance policy and I have essentially two policies. There's the main property policy, which includes wind and hail and storm and named storms and all that stuff. And then there's a flood policy. Because I'm close to the beach or I'm on the beach, we have to have a flood policy, but I don't have to have a flood policy, right? I think my regular insurance is something like $12,000 a year, which is up, right? It used to be a total of I want to say 16 grand just 2 years ago. And now just the property is 12. And then the other one was 8,500 just for the flood. Now I live in Charleston and we had Hurricane Idalia come through a few weeks ago. Literally 2 days before both of those two policies came up for renewal. Before I paid the premiums on those two policies, we had Hurricane Idalia come through and it had the 5th largest storm surge in Charleston history since they started recording it 200 years ago. And it came up close, but it never got into my yard at all. The dunes kept it back and my house is elevated enough where the storm surge never came through. So I'm thinking, I'm paying $8,500 a year for this flood policy. That's pretty unlikely. And by the way, I looked at what the coverages are. First of all, my deductible is another $10,000. So even if it did create less than $10,000 of damage, I couldn't claim it. The other thing is, it didn't cover most of the stuff that's on the ground level, right? In Charleston, a lot of the houses are elevated. And so none of my actual belongings or dwelling or content is on the ground floor. There's a couple things that are underneath the house, but that's not covered, it's not insured. Even like the garage doors, right, aren't insurable on this thing. And it caps at $250,000 a year. So I'm looking at this and thinking, what the, I don't even have a claim. I'd have to have flood levels that hit 12 feet high and started attacking the lower level of my house in order for this to even pay out. And it's only 250 grand. At that point, my house is probably gonna fall over and it's a 250 doesn't do me anything anyways, right? And so here's the idea. I talked to my insurance guy, Drew McConaughey, absolute rock star. You should definitely connect with him. I don't get anything from telling you that, but I'm just, other than accolades and maybe he'll buy me a steak one day. He hasn't, but he should, right? Anyways, and I said, dude, I'm looking at my policy and I'm wondering, why am I paying for this, right? My lender doesn't need it, doesn't require it. It doesn't cover anything that's on the ground level. We had the 5th highest storm surges in Charleston history and didn't even get in my yard. And it's $8,500 a year with a $10,000 deductible with only $250,000 of coverage. I should just light this on fire, don't you think? He's like, dude, absolutely. You're like, if you don't need it, don't do it. You'd be better off investing that $8,500 into things and improvements in your property that would then reduce the risk of having an insurance claim. So he's like, dude, go and buy, I mean, how many sandbags can you buy for $500, right? And just fill those up, put those around the ground level. You know, I have like my fitness area on the ground level underneath my house, and doing things like that, or taking some of that money and putting in a reserve to then pay for any sort of damages if my pool heater gets busted and I have to spend another $5,000 to get a new pool heater. You have like this account of reserves that you're not burning and lighting on fire and giving it to the insurance company. Instead, it's sitting in your bank account and you're making improvements to your property or having it in reserves in order to pay for those things. So that's number one. So I was able to eliminate that and save $8,500 a year. The second thing is going over to your main, my main policy, which I maintained. It was, I think, $13,000 is what it was supposed to be. But I said, dude, if I file a claim right now, they're gonna non-renew me. He's like, absolutely, it's happening nonstop. And so I'm like, all right, so I'm not gonna file a claim if it's anything under probably $25,000. So why not just take my deductible and raise it to $25,000 instead of just $10,000, or maybe it was at $5,000, I can't remember. But we raised it up and I saved about $1,500 or almost $2,000 per year in premium because I increased my deductible. Why? Well, I can't file a claim if there's $16,000 of damage anyways, because then they're just going to drop me and I'm going to pay more in premium anyways. So the idea behind it is increase, if you have the ability and the means to do this, right, and you have some additional cash and you're saving money in other places, and you know you're not going to file a claim, why not increase your deductible in order to then lower your premium? And again, let me take that $2,000 that I'm saving and leave it in a reserve account or put it in my pocket or make other improvements to the property in order to reduce the risk. And this isn't only something for your own primary residence. I'm also looking at it from an investment perspective. So we just had a renewal that came up on a 36-unit building that we own in Cleveland, Ohio. Now this is like a 70s vintage building. So it's got older electric, it's got older plumbing, it's got older roofs, right? Just the infrastructure is a little bit older. When the insurance company came back, there were a couple things that never were issues in the past, and all of a sudden they became issues, right? Like we had these things called stab lock breakers on a couple of the breaker boxes. And it cost a few $1,000s in order to change these things out, but it was only, I think, on like 10 of the boxes. But our insurance policy jumped up by like $15,000 or $20,000 because of like these 10 breaker boxes. First, we called the insurance company and they told us, well, it's because of this. If you didn't have this, yeah, your premium would be here, right? Well, what if we make that improvement? Then does it drop the premium? They said yes. So we called up an electrician. Electrician came out. We got a quote in order to change out all 10 of them, which would be a lot less than changing out one. And I think it ended up costing us, I don't know, let's call it $20,000 in order to make an improvement to our building, which then saved us about $25,000 or $30,000 on an annual recurring expense on the insurance. So we were able to, instead of spending that money, and again, lighting it on fire with the insurance company and never seeing it again, take those dollars, allocate it towards improvements in the property. Then by doing that, reduce the premium, have a better property, and that has more value whenever we go to sell it in the future because we made these additional capital improvements to the property. So we've been going through all of our insurance policies and figuring out, what are the premiums, right? What are the deductibles? Can we raise the deductibles? Are there coverage limits that don't make sense because they're too low and we can eliminate it altogether, or we need to maintain it, or what does all that stuff look like? And we're going property by property and asking proactively the insurance company, how can I reduce my insurance premium? What improvements can I make to the property that you see as risks that I can just run a math equation on and see, does it make financial sense to then change out those breakers, or to make improvements to the roof, or to make improvements to the HVAC, or whatever they say that they see as risks are things that you see as opportunities to make capital improvements to your property, and then lower your insurance premium, have a better property with higher net operating income, which will just increase the value even further. So sit down with your team, Go through every single insurance policy with your team, with your insurance agent, and run through all of them and see where you can save a couple of bucks. Hopefully this is helpful. Hopefully it's a way that you can attack some of those things that are eating into your pocket right now. And if you got some good takeaways from this, please share it with other landlords. Share it with, I mean, really anybody, because everybody's policies are going up. So hopefully you got some good takeaways. Give me your comments below if you got any other ideas on ways to reduce your insurance premiums. And if you got some good value out of this, please do me a favor, like the video, subscribe to our Legacy Wealth channel, and share this with a couple other people who can help.